Hello and welcome back to Game of Trades, your number one channel for videos on the stock market and cryptocurrencies. The S&P 500 continues its aggressive move up that we've seen since the banking crisis, and we're actually seeing a huge number of people getting sucked into this rally, flipping bullish here as we reach this important level of resistance, 4,300. This is how market psychology works. I'm going to show you in this video how we're seeing one of the biggest flips in investor sentiment, and investors who were very much convinced by the bearish case in October of 2022 are now flipping bullish as the market is likely to reverse here. Possibly one of the worst moments to be entering the market, as we are seeing strong signs of complacency in the market. Indicators like the put-call ratio reaching extreme levels on this recent run. Same thing for the AAII investor sentiment survey that recently spiked last week to extreme optimism after having printed some of the most bearish readings here in October of 2022, right at the bottom of the market. I'm going to show you what this all means for investors and for the stock market in general. If you enjoy this video, don't forget to smash the like button and of course subscribe to the channel if you haven't already. Now without further ado, let's get right into it. And we've had one of the biggest flips in investor sentiment here after having seen a period of extreme pessimism from around June all the way till around December of 2020. You had some of the most bearish readings on these investor sentiment indicators. We were extremely optimistic on the market back in June of 2022. If you were with us on GameOfTrades.net, we were buying the dip aggressively back here, and same thing towards the end of September, beginning of October of 2022. We wrote this piece here, S&P 500 tests its 200-week moving average as investor sentiment reaches extreme pessimism. We had stocks at their 200-week moving average, a very, very important reversal point throughout stock market history. And that was happening as you had investor sentiment at extreme lows. Whether you looked at the investor sentiment surveys or you look at asset manager sentiment, it was extremely bearish at that moment, right? All of these charts are from the 21st of October. You can see analysts had just turned very negative on earnings, and investors were calling this just the beginning of a recession getting priced in. But we actually found that that was a contrarian signal for the market following earnings downgrades like the one we had between August and October of 2022. The market is on average outperforming in the 6 to 12 months after those earnings downgrades, which is exactly what we've seen since October of 2022. We're around 9 months after these earnings downgrades, and we've seen the S&P 500, of course, rise very quickly here. And now those same investors that were bearish back in October of 2022, they're now flipping bullish. Now, big tops in the market are much more often going to happen with investor sentiment near bullish levels. You can see here the top of the 2020-2021 bull market, the top of the 2019 bull market, again here investor sentiment being the most bullish right near the top. Here in 2017, after a major bull run between 2015 and 2017, you have an extreme level of investor optimism right before quite a significant correction in the market here. Now, of course, that is to be taken with a grain of salt, because you can also see that you have sustained periods of bull markets like in 2021 where investor sentiment can remain optimistic throughout that entire period. But that means that the market is supported by underlying fundamentals. If everyone's bullish but the economy is booming, monetary policy is quite easy as it was back in 2021, well, you can have a raging bull market while investor sentiment remains bullish, which is exactly what happened here. Right now, we don't think that fundamentals support this rally. I'm going to show you some new data that came out last week that points to that idea. However, if you are an investor and you think that we are on the brink of a big economic recovery here, then you really shouldn't see this as a sell signal. That's really where you need to be making your own opinion as an investor. We're going to give you our opinion. We're going to give you our take on where the market is going. But as I always say, there's some very smart people out there with very different opinions on the market. So take what we say with a grain of salt. We show you the data, we give you our opinion to hopefully help you make better decisions as an investor. Now, another indicator that's showing us the similar flip in investor sentiment is the put call ratio that recently reached an extreme reading of optimism. Now, this is a very impressive indicator. We've used it countless times on GameOfTrades.net to try and time our macro calls more accurately. You can see, first of all, throughout this entire bear market, November of 2021 here, right near the top as we were forming this topping pattern on the S&P 500, March of 2022 here, August of 2022 right here, timing this top beautifully. And if you were with us back in February of 2022, you'll know that this is exactly when we changed our S&P 500 target from 5,200, as we did expect that the market could see a final melt up type of move before recession really materializes, to 3,500, as we started to see an increasing amount of evidence that the window of opportunity for stocks to rally is closing, as we are getting closer to a recession. And the put call ratio here in February was an incredible indicator to time that local top. Now, of course, this shows you the limit of these types of indicators, because the market, of course, continued to run higher after that small correction. And now we're back to those extreme levels of complacency. You can see our target for the S&P was downgraded early February of 2023 from 5,200. Now, again, if fundamentals support this rally, if we do see an earnings recovery, an economic boom cycle again right now, just like we did throughout 2021, this indicator is a lot less relevant. You can see here it stays in this extreme pessimism zone throughout this entire rally and doesn't really provide a very strong sell signal. So again, if you're an investor very optimistic on the economy, then in that case, perhaps the best option is to wait for a small pullback, wait for this extreme optimism to get worked off, and you can use that as an opportunity to buy the dip. But do fundamentals really support a bull market right now? Again, in our opinion, it's a clear no. You'll look at the recent initial claims data. This is something we've been calling for quite some time now. Initial claims are rising, clearly trending higher. Anyone who's saying the recession is not playing out, it's not going to be happening in 2023, anything is possible. This could always reverse. But right now, momentum is to the upside. In terms of the unemployment market deteriorating, and you can see that's typically associated with the most intense parts of bear markets. As we have the unemployment rate rise, consumer spending goes down, earnings tend to also go down. We saw this in almost every single bear market throughout history. I'm not going to go through all of them, but this is just two examples in recent history where rising unemployment is bad for stocks. And right now the market is kind of disregarding that. It really doesn't care too much about it. But that's right where these types of extreme readings, where a lot of good news has already been priced into the market, can mark significant reversal points for the stock market when fundamentals no longer support the actual bull run that's playing out. In fact, I can show you what the put call ratio looked like in 2007, 2008 to give you some more examples. Keep in mind the level we're seeing right now, we're quite a bit below that red dotted line. So we're quite extreme right now. If we compare that to 2008, you can see we only had a handful of readings that showed this type of complacency. One of them being right here in May of 2008. One of them being right here. I believe that must have been towards the very end of 2008, around November or maybe even December of 2008, right before the final capitulation moved down to March 2009, where you had the low of the financial crisis. You also had an extreme reading here, although that was more towards the top of the bull run than during the bear market. That did mark also one very, very important top here in 2008. You also had that in 2010, marking this local top here, pretty powerful 10% correction, I believe. But again, when you are in a true bull run where earnings are expanding, you're seeing a cyclical economic recovery. Well, that's where these extreme pessimism signal from the put call ratio can lead to false signals. So again, if the stock market is supported by underlying fundamentals, this can be a false signal. So although it has become increasingly tough to be a bear in this type of environment, especially on social media, where many people get very emotional when they miss out on some gains or they experience some losses and they see other people doing well in this type of environment. People can get very greedy or fearful, and we definitely have that emotion, whether that's on Twitter or on YouTube right now. But we're always going to be here to provide our opinion on the market. The model portfolio feature that we have at gameoftrades.net is barely a percentage point behind the S&P 500, and that's despite the fact that we have a very defensive positioning right now that we're incredibly comfortable with heading into this tough market environment that we expect. So if you want to check out what it looks like, see how we manage the positions, we give you alerts when we're buying something, alerts when we're selling something, a lot of forward guidance around all the positions that we have, laying out our entire thought process for our opinions, for the decisions that we take with the model portfolio. Of course, if you enjoyed this episode, don't forget to smash the like button and of course subscribe to the channel if you haven't already. Now, in the meantime, I wish you good luck on your trading and see you next time.